Hello, hi, namaskar to all the students of CA Foundation. My dear students, we solved so many simple problems on the valuation of inventory, right? Almost five classes and eight problems are being solved in that inventory valuation. Now, let us learn one more problem on the inventory, that whatever the problem we solved in the earlier classes, similar to that of. But after this class 6, when I start a class 7, we are entering into the next method of inventory valuation, the next type of inventory valuation. Okay? Now, see, we are into class 6. We are into class 6, my dear students. This question is asked. This is a class 6. Class 6. This question is asked in December 2023 for how many marks? For 4 marks. Fine. See what happened here. Let me read the problem first. From the following, ascertain the value of stock on 31st March 2023. On what date we have to ascertain the stock? Ascertain the value of stock on 31st March 2023. See, in your notes, that is for a problem number 9, what we have to calculate, stock on 31st March 2023 is question mark. Fine. We have a opening stock. See what actually given, opening stock is given. Fine, we have a opening stock. Cash sales and credit sales, we have to add both. When you add both, we are getting a total sales. The total sales comes to 9,50,000. Later we have a purchases. Manufacturing expenses is a direct expenses. It comes in which account? It comes in trading account. Advertisement expenses, my dear student, my dear children, it is indirect expenses. It won't come in trading account because it comes in P&L account. Rate of gross profit is given. Profit is given on what? Cost. Remember, the profit is given on cost. Now, see what happened here. At the time of valuing inventory on March 2022, see, you have to ascertain for 2023. It is given on March 2022, means it is nothing but opening stock. A sum of rupees 12,500 was written off on a particular item, so it is being written off, which was originally purchased for 50,000. See, purchased for 50,000, written off is 12,500. Out of 50,000, subtract 12,500, we are getting 37,500. What to do with 37,500? It is to be subtracted from opening stock. That what we learnt from a previous 3 classes, right? So many problems we come across the same thing. And my dear student, these goods are sold during the year. Oh, it is being sold. Put a star mark for sales. How much? 40,000. So what to do? It is to be subtracted from sales as sale of abnormal items. These are not a normal items, these are abnormal items. So this is all about a problem. Now we will write the stock is given on what date? What stock is given to you? You have been given with opening stock. See, what is the amount of opening stock in the problem? 1,47,500. See, opening stock is given, we have to calculate closing stock. Fine. Now let us write trading account. There are two methods through which we can ascertain the value of stock. One is by using a statement, another by preparing a trading account. I usually prefer the trading account, which is so easy for a student to understand. Now, my dear student, we have a opening stock of 1,47,500. So, let us write to opening stock 1,47,500 less balance to be written off. How much we have to written off? Out of 50,000, 12,500 is written off. Out of 50,000, 12,500 is written off. We have to take remaining 37,500. After subtraction, we will get an amount of rupees 1,10,000. Am I right? See the next one. Cash sales and credit sales, 5,50,000 and 4,00,000. By cash sales, 5,50,000 plus credit sales. How much credit sales? 4,00,000. Add both, we get 9,50,000. Out of this 9,50,000, what we have to do? We have to sell, we have to subtract the sale of these abnormal goods as a 40,000, right? Less sale of abnormal goods. How much it is? 40,000. After subtraction, we will get 9,00,000 10,000. How much it is? An amount of rupees 9,10,000. Fine. After this, there is a purchases of 8,85,000. Good. Then we have a manufacturing expenses called direct expenses, 1,35,000. 1,35,000. Then advertisement is indirect, we should not record it. There is a gross profit on cost, what percentage is? 25%. So now let us write what is given to you. To gross profits, it is what percent? 25% on cost. See, my dear student, try to be very, very careful. Here, the gross profit is given on cost, but you have a sales of 9,10,000. This is the amount of sales. You know the sales. Repeatedly, I am telling you, in every video I am explaining you. In this particular problem, we have a sales of 9,10,000, but the profit is given on what? Cost. अब क्या करना? Is it 25 by 100 लेना or 25 by 125 लेना? Already I told you that. Gross profit is 25% on cost, but we have a sales of 9,10,000 in the problem. Profit is given on cost, but we have a sales. Mismatch हुआ है ना? अब क्या करना? Instead of 25 by 100, we have to take 25 by 125, remember, because there is a mismatch. If it is 10%, 10 by 110. If it is 4%, 4 by 104. If it is a 12%, 12 by 112. Please remember this concept. Now what we have to do? Take the sales of 9 lakh, 10,000, 25 by 125. Use a calci and work out. It amounts to rupees 1,82,000. That completes the problem, right? We have taken all these stock adjustment, everything we have covered. Now what we have to do, you work out a total. The total comes to rupees 13 lakh 12,000. What is the difference? That difference is called, my dear student, as a closing stock or inventory. It is of rupees 4,02,000. I hope you got it right. Really, my dear student, did you understood why Sudhakara didn't took 25 by 100? Why he has taken 25 by 125? Because profit is given on cost, but we have a sales. When there is a mismatch, we have to take 25 by 125. Got it right? This is how we have to ascertain the value of stock. In the next video, we are going to solve different type of problems under the inventory valuation. Thank you. Take care. Bye bye, my dear student. Have a nice day.